Wealth in Australia since 2008 has basically doubled. We have a very high per capita wealth. Probably 80% of that wealth is tied up in property, which is great news for existing property owners. But when we look at future generations and even younger Australians now, I think it's hard to save for a deposit to get access to housing.
$10 billion plus profit for the year, yet your share price has tanked today. What do you have to do to please investors?
Well, look, I don't worry too much about the near-term movements in the share price, but of course we're cognizant that the Commonwealth Bank is owned by 13 million Australians, either directly or indirectly. So there's a lot of interest in the share price. For us, the most important thing to do is to try to execute our strategy consistently, deliver a great proposition for our customers, hopefully post reasonable returns over the long term to our shareholder base. And I think if we do all of those things well, then we're striking the right balance.
Is it something of a relief that your share price has come off from recent record highs, given how high it got?
Yeah, I guess we don't think about it in those terms, other than, as I said, we're conscious that at any point in which our shares are trading, there's a lot of Australians that are invested in the performance, and when the shares are substantially higher than they are, there's obviously someone buying and someone selling at that price. But it's, I think it's a distraction if you allow yourself to focus too much on the vagaries of the market and intraday moves. What really matters over the long term is how we support and serve our customers, whether we do a great job attracting the best people to be able to do that. We promote financial stability and economic growth across Australia. We do that sensibly and sustainably, and we invest in a strong strategy and technology to underpin that. And if we do all of those things well over the long term, then we should be able to deliver reasonable rates of return to all of our shareholders.
One of the factors behind your return was rising net interest margins over the past year. Given those rising margins, can the big banks afford to be a little more competitive when it comes to deposit and mortgage rates?
Yeah, I mean, actually, there's a lot of competitive intensity in the market. The change in the net interest margin is actually the repayment of what was the term funding facility, so a bank holds less liquids. So putting that to one side, actually, there's pressure on margins because of competitive intensity, and as interest rates go down, which is of course great news for our customers who've got a home loan, that puts pressure on margins. And you know, as you're identifying, that's the best overall indicator of profitability within a bank, is that net interest margin spread.
In your presentation, you revealed 139,000 customers had gone on to tailored payment arrangements over the past year. How close did many of those customers come to defaulting on their mortgages before the Reserve Bank started cutting interest rates?
Yeah, one of the things that we've been really focused on is making sure that we make it as easy as possible for customers to get financial assistance and support. Now, that can be where customers are unable to make their repayments, they need some sort of restructuring, they need a temporary pause, and the numbers that you mentioned are correct. We also saw that fall by 19% over the course of the year, which is of course welcome relief for our customers. I think it's a function of a few things. Inflation moderating, as we've seen price growth start to slow. We see the effects of the tax cuts come through. The labour market remains very strong, and so overall, I think we would see over the last few years, given the changes in interest rates, that there's been a lot of resilience across the broader economy, and we recognise that those customers in those circumstances are obviously finding it very challenging, and obviously it's great to be able to support them and to see so many of them being able to get into a slightly stronger financial position over the course of the year.
The majority of your new mortgage customers are households earning over $200,000 a year. How concerned are you about housing affordability?
I'm very concerned about housing affordability over the long term, and there's a couple of ways I think to look at that. I think wealth in Australia since 2008 has basically doubled. We have a very high per capita wealth. Probably 80% of that wealth is tied up in property, which is great news for existing property owners. But when we look at future generations and even younger Australians now, I think it's hard to save for a deposit to get access to housing. That's why supply is such an important part of that. You can't build supply of houses by adding borrowing capacity. As interest rates goes up, it makes it harder for younger borrowers to be able to save and purchase a loan. So obviously the interest rate environment's going to help that a little bit, but really what we need is the ability to build many more houses to keep pace with a growing population. If we do that well, that's both good for economic growth as well as making sure that there's equity between future generations who've got access to high quality housing that's close to work and transport.
Do we need to increase taxes on housing, including owner-occupied housing?
Well, look, I think there's a number of elements that we discussed at the Economic Roundtable. You may have seen our public submission, but beyond that, I'm going to save all of the contributions which we seek to constructively make on behalf of our 10 million personal customers and more than 1 million business customers to the roundtable. But look, I think a number of policy options across a very broad range of topics will be canvassed, and I think the government should be congratulated for putting the roundtable on, and certainly our intent to engage as constructively and positively as we can.
As you've mentioned, you are attending the federal government's economic reform roundtable next week. Is there anything in particular that you'll be pushing at that forum?
Yeah, so again, I want to leave a lot of the specifics to be in the room. I think it's only sort of courteous to save that for the 3 days, but we touched on one of the most important from our perspective. Housing affordability is really important. Obviously, things like the energy transition, skills, technologies, including AI, will be topics of discussion, as will resilience. I think that's a really important topic, both financial and non-financial resilience for Australia. And then, of course, how to fund increasing expenditure and obviously tax, which will probably be one of the more challenging areas. I think it's on day 3.
Just on that, in CBA's submission to the Productivity Commission ahead of the roundtable, the company called for higher taxes on wealth and consumption to help fund lower taxes on income. Do you have any specific ideas in those areas? Yeah,
we have a number of specific ideas, most of which I think I should leave but for the roundtable. But as you'd expect, I think if you look at any OECD benchmarking, our tax on consumption is lower. And I think if you look at some of the concessions, getting the distribution of both the benefits and the costs with any reform is really important. Also, very conscious of course, it's up to the government to decide what decisions it would like to take. I think it's also important to have a long-term view. I think we're certainly approaching it with some of our input in terms of what we think we could or should embark on, or at least in our opinion, over a decade, not over the next 3 years. So I think you've obviously got to bear in mind the ability to be able to convince the broader electorate that those reforms are important, but I just think, look, it's a good opportunity to at least contribute, to hear other people's views, and hopefully there'll be consensus in a number of important areas, but certainly I don't expect that to be true for all of them.
The CBA submission also called for a cap on superannuation balances. How much super do you think someone should have before they lose tax concessions on those savings?
Yeah, look, I think the principles that we set out there was that it should be able to minimise any dependence on any sort of government benefits, and I think that people need to be able to have an affordable and a comfortable retirement. Now, those numbers, whether they were sort of indexed or in and around the numbers that have been proposed, I don't think it's unreasonable for very large super balances to not be getting the same concessionary treatment that they receive.
Can you put a dollar figure on?
Not that I'm going to right now.
CBA's been at the leading edge of technology amongst Australian banks. How are you being impacted by AI in your business currently?
Yeah, we think technology is obviously really important in terms of the way we serve our customers, in terms of the day-to-day experience, but also very important in terms of protecting them and the broader community from scams, fraud, cyber and financial crime. So we elected over the course of this financial year to increase our investment by another $300 million on top of the just over $2 billion that we spent in the prior year. Now, some of that was accelerating greater investments in modernising our technology. Some of that was in AI. We think it's an important technology. We think it's very early in terms of its potential, And we're starting to use it in a number of ways, both building capability for our people so they can do a better job serving our customers directly in some of our customer experience. And as I said, in areas that are helping us to identify and protect customers in fraud and scams. The reality is some of those technologies will be used against us and other financial institutions and industries. And so we have to keep pace, and that's meaning that we're investing now at record levels.
And what effect do you think AI will have on jobs at Commonwealth Bank?
Well, I think over the long term, it's obviously really hard to predict. We put that in the context of we employ approximately 50,000 people. We added more than 2,000 people over the course of the financial year. A lot of those were in technology and part of that investment that I talked about. We added more lenders, we added more business bankers, we also added a number of operational staff. So I think it's true of any technology that some tasks may be automated. Ultimately, what we've been able to see before is that people have migrated to higher value work. I think we've got to be really conscious that there will be impacts to certain job roles. I think the full potential of AI, to the extent that we even understand how that could be defined at this point, is many years away. And so at least the way we're approaching it is being prepared to talk about what we are doing internally, investing in the capability so that our people can be as skilled as possible. I mean, we'll look for opportunities if we can deliver a faster and better experience for our customers. Some of the roles that we're recruited in the last 12 months, we didn't have 3 years ago. So I think it's absolutely appropriate to be thoughtful and at times, wary about some of the risks, not just about the opportunities, but to make sure that we think about the long-term competitiveness of Australia and of industries like banking.
Can I ask where those new jobs were generally created?
Generally in technology, not exclusively.
And in which country?
A combination of both. I mean, we have...
When you say both?
I'm assuming you're referring to India, so both Australia and India. We used to have a lot of resources that were working for other companies in India, but we've definitely built capability there. We've got a lot of capability there in financial crime and some areas of technology as well. We still have a very large domestic workforce. We have to be able to recruit and bring on new employees to the Commonwealth Bank in a variety of jurisdictions. We just don't have enough talent, the density that we need in all of the markets in which we operate.
You mentioned global economic uncertainty a lot in your presentation. What's the biggest worry keeping you up at night?
Well, I mean, I think we're in a period now where there is economic uncertainty and volatility. I think there would seem to be quite different views and strategic posture across a number of very important countries and economic powers. I think when we think long term, we have to be, as a financial institution, you have to be hoping for the best, but absolutely prepared for a wide range of scenarios. And so during the period, alongside the investment, we've also sought to strengthen the balance sheet, capital, loan loss provisions, so that we can, across a wide range of economic scenarios, keep supporting Australia, keep supporting our customers.
What is that worst case? Is it like what the Australian Treasury modelled in terms of loss of confidence in the US dollar?
There's a whole range of different scenarios. I mean, generally as a financial institution, you do and you're required to do lots of different stress tests. Now, they don't need to be they're sort of remotely plausible, but still feasible. So anything that would have a significant impact on Australia's economy, obviously any sort of breakout in conflict, and we've seen examples of that across the world, anything that impacted our trading relationships with a range of different partners. But as a financial institution, you have to be able to think through lots of different scenarios and make sure you're as well prepared as possible.
Matt Comyn, thanks very much for your time.
Pleasure. Thank you very much.